Good evening, friends. I hope you and your family are safe and well. Uh, Last lectures we have discussed about the banking company's final account. We have discussed the some theoretical part and one practical problem we have discussed. Now we have to focus on this coming exam, and we organize this exam this coming 5th February. Now, friends, this particular exam we will conducted online mode. It means, friends, we will set multiple choice questions. We will ask 50 multiple choice questions, and you should solve 40 multiple choice questions. It is totally online mode exam is there. From this 40, whatever for 40 attempted, you can attempt the 50 also, but you should attempt 40 questions and you will get 60 marks. Total marks is 60, means 60 marks and 40 questions are there. How it will convert it is a problem of the college and university, but you should prepare all the chapters properly. Now, friends, we already discussed about the various kinds of chapters, that you understand, that you know about the what kind of chapters we have discussed. Now, whenever we will talk about the advanced financial accounting, there are total I think how many chapters you have studied, you are aware about. So there are total 4 chapters are there in our study, that is foreign currency conversion, that we have studied. Then we have studied the final account of the banking companies, and now we already studied about the final account of the cooperative societies, final account of the cooperative societies, final account of the banking companies, and foreign currency conversion. These 3 chapters are over. Today we are talk about the final account of the insurance companies. Insurance companies final account, it's very important because they have their separate act, they have their separate uh, format also, and we will talk about the in our exam point of view, we will talk about the various things, how we will think about the format, what kind of format is there, what kind of treatments are there, what are the concepts are there, that we will talk about today's lecture. It is very important for exam point of view, and today we are talk about only in focus on our exam and with our study also regarding the final account of the insurance company. So let us discuss final account of the insurance company. Now, friends, business of the insurance company is governed by the Insurance Act 1938, along with the regulation framed by Insurance Regulations and Development Authorities Act 1999, and this is the term is IRDA. Now, friends, insurance is an agreement. It is a contract of the indemnity between the insurer and insured. The insurer is a party agreed to provide protection against the loss or damage in the form of promise to pay for such loss to another party known as a insured, in consideration for a fixed sum of money known as a premium. It's a very simple meaning. Insurance is an agreement. It is always agreement between the insurer and insured. Insured means the person who insured in particular goods, or he himself insured. An insurer is a company. Now there are terms and conditions of the such insurance contract. This particular contract is called written contract is called as a insurance policy. You should keep in mind written contract terms and conditions they are provided. It is called as a insurance policy. Now there are two types of insurance. Generally there are two types of insurance: life insurance, general insurance. Life insurance is related to the life of the human being, and general insurance related to the product, goods. Now under general insurance, three types of insurance are there: fire insurance, marine insurance, miscellaneous insurance. Now friends, we will talk about one by one. First of all, we will discuss about the life insurance business. In case of the life insurance, insurer guaranteed to pay a certain sum of money to assured. Assured means insured on completing the a stipulated period or in the event of the death of to his legal representative. It covers risk and give the protection for the investment. Generally, we will take policy, insurance policy. There are number of insurer are there in nowadays. LIC is a government company. Then Tata, Reliance. There are so many private companies are there. Tata AIG insurance company. Then Bajaj Life Insurance Company. There are number of companies are involved under such. Then this particular insurance company, they will give the guarantee to you after completing the 10 years period, 15 years period, after the death of the legal representative or after the maturity, you will get the protection. So this insurance is a protection. It is not investments. We will not talk about the investment point of view. The life insurance business is a business of the effecting contract of insurance upon human life, including any contract whereby the payment of money is assured on the death or the happening of any contingency depend on the human being, and any contract which is subject to payment of the premium for a term dependent on human being and shall be deemed to be included. So these things you should keep in mind. Now we will directly talk about the our preparation of the financial statement. Whenever we will talk about the preparation of the financial statement, the financial statement, why we will prepare? Because we have to disclose this financial statement. It is mandatory. The financial statement of the life insurance company, it consists of the revenue account, profit and loss account, and balance sheet. This statement to be prepared in accordance with the provision of the IRDA. And preparation of the financial statements and the audit reports of the insurance company regulations 2002 and the compliance with the requirements of the Schedule A. Schedule A. The insurer need to prepare. Insurer means company. Life insurance company need to prepare revenue account in Form A, that is RA. Profit and loss account in Form A, PL, and balance sheet in Form A, BS. Which schedule they consider, they apply. Every company must apply this Schedule A. Every insurance company, life insurance company or insurer must prepare revenue account, profit and loss account, and balance sheet in the form of A. In the form of which form they use? A form. Now friends, whenever we will talk about Revenue account contain total 4 schedules. Revenue account contain how many schedules? 4 schedules. Schedule number 1 premium, schedule number 2 commission expenses, schedule number 3 operating expenses, and schedule number 4 benefits paid. So whenever we will talk about the revenue account, how many schedules are there? 4 schedules. Schedule number 1 premium, schedule number 2 commission expenses, schedule number 3 operating expenses, and schedule number 4 benefits paid. It also shows the item having no specific schedule, such as income from investments, interim bonus paid, provision for doubtful debts, and tax, such other provisions. So these kinds of provisions, such kinds of items, no specific schedule: income tax, interim bonus, provision for doubtful debts, and taxes and other provisions. The bottom section of the revenue account exhibit the appropriators of the surplus. Means why we prepare the revenue account to find out the surplus, such as a transfer to shareholders account or transfer to other reserves account. So whatever surplus earn, it is transferred to shareholders account, and the remaining balance of the revenue account is transferred to life insurance fund account. Whatever balance remain, it is transferred to life insurance fund account. Now we will talk about the profit and loss account. The profit and loss account shows all expenses and incomes not directly related to the insurance business, and the balance sheet of like insurance company are prepared in a vertical form, have 2 sections: sources of the funds and application of the funds. Schedule number 5, 6, 7 belong to sources of funds. Schedule number 8 to schedule number 15 shows application of the funds. And the contingent liability, it's very important. Contingent liability is disclosed as a part of the financial statement by way of note of the balance sheet. I hope you understood, friends. This is a very important part because I will put the certain questions related to the multiple choice from this particular notes. So you should keep in mind, you have to study hard and understand the concept, understand the what kinds of things are there in insurance business. Now we will talk about the form A, RA. RA means the revenue account. Whenever we will start the revenue account format, we should write the name of the insurer, the company's name, their registration number and date of registration with the India. Revenue account for the year ended, policy holders account, technical account we can say that, and here it start from premium earn, because this is a revenue, company's revenue, whatever premium paid by the insured, it is received by insurer company, so it is the income of the company. The premium, reinsurance ceded, reinsurance accepted, income from investments, for example interest, dividend and rent, gross profit on sale or redemption of the investments, loss on sale or redemption of the investment, transfer, gain on revaluation and changes in the fair value, other income to be specified. This is a total of the A. Then commission, schedule number 2, and operating expenses related to the insurance business, schedule number 3. Then provision for doubtful debts, bad debts written off, and provision for tax, there is no schedule. Then provision for other than taxation, for diminutions the value of the investment and others. And then we can say that the benefit paid net value. After A, total, from A total we will deduct total B. So we will get D value, and first of all we should add the interim bonus paid, changes in valuation of the liabilities in respect of the life policies, gross amount ceded in reinsurance, amount accepted in reinsurance. This is total A minus B minus C. Whatever amount come, it is D may be surplus or deficit means minus figure, and surplus means a plus figure. And then appropriation, now this surplus amount where we will transfer, it is transferred to the shareholders account, it is transferred to other reserve account, and balance being transferred to the future appropriation. So I hope you understood this revenue account, how we will prepare, what type of format is there. Now let us discuss about the main note. Represent the deemed realized gain as a norm, as per the norm specified by the authority. Represent the mathematical reserves after allocation of the bonus, and total surplus shall be disclosed separately with the following details: interim dividend, bonus paid, allocation of the bonus to the policy holder, surplus shows in the revenue account, total of the ABCD, and see the note happened at the end of the form APL, profit and loss. Now before talking this profit and loss account, we will discuss the schedule which are related to the revenue account. The schedule number 1, premium. We have to write this schedule. Schedule number 1 belong to premium. Current year value and previous year value we have to compare. In our problem this kinds of question will not come, but you should know about the schedule. First year premium, renewal of the premium, and single premium. The net premium that we have to keep in our revenue account. Here premium under revenue account, schedule number 1, we have to write the current year, previous year. Then we will talk about the schedule number 2. Schedule number 2, commission expenses. Commission expenses, because of the this particular brokers, LIC agents, we have to pay the commission. Company has to pay the commission. The commission paid, direct first year premium, renewal premium, single premium, add commission on reinsurance accepted or commission on reinsurance ceded. With that basis, profit or commission are not combined with the reinsurance accepted or reinsurance ceded. This particular figure we should write separately. So this particular schedule we have to prepare separately for commission expenses. Then friends, schedule number 3 is very important because we will talk about the operating expenses related to the insurance business. Now what kind of operating expenses are there? Employees remuneration and welfare benefits, traveling, conveyance and vehicle running expenses, then after that training expenses, rent, rates, taxes, repair, profit and loss, printing and stationery, communication expenses, legal and professional fees, medical expenses, then audit fees, expenses as an auditor, as an advisor, in any other capacity in respect of the taxation matter, insurance matter, management services, in any other capacity, advertisement and publicity, interest and bank charges and other depreciation. So these are total, we can say that it is considered as an operating expense related to the business, and it will also show, we should show this particular figure in our which account we have to show. Which schedule we have to show? So we have to show schedule number 3, and it is related to the revenue account. You should keep in mind what kind of schedules are there. Schedule number 1 premium, schedule number 2, commission. Schedule number 3, operating expenses. And now schedule number 4, benefits. So there are total 4 schedules are there in our revenue account. Now schedule number 4 that we will talk about right now. Schedule number 4, it's a benefit paid. Benefit paid, it is a expenses. When company paid benefit, the insurance claim by death, claim by maturity, annuity, pension payments and other benefits. Amount ceded or reinsurance, claim by death, maturity, annuities and pension payment, other benefits. Even the amount accepted that time also same claims and claim death by maturity, annuity and pension payment and other benefits. So claim includes specified claim settlement cost whenever applicable. Legal and other fees and expenses shall also form part of the claim cost whenever applicable. So these are claim expenses, claim benefits on whatever claim by death, claim by maturity, annuity, pension payment and other benefits also included. And these are fourth number schedule. It's a part of revenue account. So you should know about the revenue account schedule. So friends, I hope you understood that whenever we will talk about the insurance, life insurance, we should prepare first a revenue account. And revenue account, under revenue account there are total 4 schedules are there. Schedule number 1, premium. Schedule number 2, it's commission. Schedule number 3, what? Schedule number 3 is operating expenses. And schedule number 4, benefit paid. So these are the 4 schedules are applicable in revenue account. And friends, that you have to keep in mind, it's a life insurance company's financial accounting formats. It's only life insurance company's balance sheet. It's not a general insurance company's balance sheet. General insurance company's balance sheet is totally different. We will talk only life insurance. So this particular video I discussed the revenue account. Next video we will discuss the next account that we will study properly. Then we can understand the multiple choice questions. I hope you understood.